Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Wednesday market webcast. Okay, so we had this low from back on August the 6th. They bounced it twice off the daily lower Bollinger Band. So Bollinger Bands are two standard deviations of price movement centered on the 20-day simple moving average, which is this green line right here. So that's right in the middle. So they bounced it off this lower band. They took it back to the middle band. It held there. They took it back to the lower band. So one of the basic caveats that we always have for markets, whether you're talking about a stock, futures contract, index, whatever it is, if it wants to trade below that middle band, that middle line, that 20-day simple moving average, and the lower band, it is a sell rallies tape primarily. You're looking for pops, you're looking to sell them. You can be long, but that stuff tends to be counter to the trend, all right? And that's the way this market has played out and continues to play out. So we had a second trip down to the daily lower Bollinger Band on the open Sunday night, 28.10 quarter. They bounced that right back up to the 20-day and to the yellow line here, the 100-day. They traded it as high as 99.5. That was rejected on Tuesday, yesterday. They've pushed it down since. So the bulls had a real opportunity yesterday morning, in my opinion, to break it out and go see, 29.25, 29.30, and they didn't do it. They were rejected at that middle area. And then the bears spent the rest of the day trying to push it back down. So as we go to the hourly chart, you can see it's been a week. I mean, here's your Sunday night gap down. As soon as they rallied it back to the weekly pivot here, 28.75, and that was 5 a.m. Monday morning. From that point on, with the exception of an attempt Monday to take it down 55 quarter, an attempt to take it down now, 53.75. They tried to break it out on the move up to the daily midband 99.5. We've effectively been trading in a 40 handle range, so no complaints. It's been a great trading range, right in and around the weekly pivot on either side. So the whole thing is consolidation. So no different than what we saw back here: compression, expansion. Compression, we're going to get expansion. Now, whether this continues to be expansion to the downside, I don't know, and I don't care. What I do know is that expansion moves tend to run farther and longer than people think, whether you're talking about a 5-minute chart, an hourly chart, or a daily chart, and there's always plenty of time to get in so you don't have to guess. What we did yesterday in and around the close, we put out basically a short against 28.75 against the weekly pivot. And effectively what I said was, look, if they can't convert the weekly pivot, we want to be long above if it wants to be support, but we want to be short below if it wants to be resistance. And what we have seen consistently all night long is resistance at the weekly pivot. The bears must take advantage of this. This is their shot. This is their shot. They've made a marginal lower low versus this little attempted pop down in Monday's regular session. They need to continue to expand these bands to the downside and challenge the low from Sunday night, 28.10 quarter. In a perfect world, they close below it. Now, all that doesn't have to happen today, but they do need to make a start of it today. Otherwise, this is just going to be a head fake, potentially to a band ride to the upside. I'm a little surprised that this little head fake to the upside didn't result in the band ride down. But we spent all night consolidating at weekly pivot, which is a little bit of a bummer, but at the same time, it just means you're going to get even more expansion when the expansion comes. So keep an eye on that. Again, the entire center on this tape this week has been the weekly pivot, long above, short below. What is difficult, though, is you can't be blind buying and blind selling what you think is the range. So yesterday at 99.5, we were not going, oh, okay, well, sell it, forget it. We'll fade it back. Eventually we sold it. We sold it at 94.25, sold it again at 79.75 and did well. But as it went up, we were long. Right now, we're short. And I'm not going to start throwing darts at the mid-50s, assuming that it's going to go back up. If it starts to build higher lows and it starts to move back up into 75, then we'll be there. But you don't want to be the bag holder on the expansion down, and you don't want to be the source of the squeeze if you're wrong here. Trade with the trend, take profits where you find them, let your runners work, and get out of them when price reverses, not for a minute, but over the course of a few minutes and some 5 minutes and some higher lows. That's what we work on in managing trades in the room, and that's why if you trade this stuff every day, I think it's a good place to be. All right, everybody have a fantastic day. We'll have some more stuff out on social. Take care, trade them well. I'll talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.